New data reveals the real Bitcoin valuation. Should you buy now? Well, Bitcoin, like most financial assets, are well off their highs over the last 6 to 8 months. And many people are asking if now is a good time to buy Bitcoin, or should they wait until the price goes down even more? And if so, how low could it go? So in this video, I'm going to show you the charts. I'm going to show you the data and history to show you what Bitcoin's fair value is, where the floor is, what the risk versus rewards are, so you can make a much better informed decision. So let's go. All right, welcome back. If you're new to this channel, my name is Mark Moss, and I make these videos to change the way you think about money because almost everything you have learned is wrong. And today we are talking about valuations. We're talking about Bitcoin's valuations, which a lot of you watching this are saying Bitcoin's worth nothing. Okay, that's fine. You can say that. But I have some charts, some graphs, some data to show you maybe otherwise. Now, something is only worth what other people believe it to be. So one man's trash is another man's treasure. You may not value it, but other people do. And so we need to find out, where do other people value it? So that's what we're going to look at. We're going to look at the data, and even if you think it doesn't have any value, other people do. So we're going to find where those levels are, and I'm going to show you some perspective that you may not have. Now, real quick before we jump into it, if you value me making these videos, I would value you going ahead and clicking that like button and hitting that subscribe button if you can, real quick. Help get this video out to more people. All right, let's go ahead and just jump right into this. So there's a couple charts we're going to look at. So the first one, now one thing that makes Bitcoin unique from any other asset is it's an open source network. And so because of that, we can see all the data around the network. And so we can see what's called on-chain metrics. One of the companies that we can get this from is Glassnode. And so we can see this. And when we look at the data, we can chop it up hundreds or thousands of ways, probably infinite amount of ways. And we can start to see when Bitcoin moved around. What was the price levels? How big are the wallets that hold it? The wallets that hold it, do they sell? Do they hold for long term? We can see lots of different things. So the first thing we're looking at is something called the realized price. All right, and what this shows us is when the Bitcoin moved the last time, what was the price of that Bitcoin? So for example, if the last time this Bitcoin moved was at $1,000, well, then we know that Bitcoin could fall a long time before it hits their limit of where they're going to lose money. And if they've been holding that long, they're probably going to continue holding. Versus if somebody just bought last week, then they could be short term and they could be more likely to sell. So we look at what the price was the last time it was moved, and then we take that and we divide it by the circulating supply. So with Bitcoin, we know there will be never more than 21 million. There's about 19 million in circulation today. So we take that last move price divided by the circulating supply, and we get what's the average entry price. And that's what we can see on this chart right here. So the gray line is the price of Bitcoin. The orange line is this realized price that we're talking about it. Now, one asterisk that I put on here is this is only for on-chain Bitcoin. So if you keep your Bitcoin on an exchange like Coinbase, for example, it doesn't track that because it's not being done on the main chain. If you are keeping your Bitcoin on an exchange like Coinbase or wherever, get it off. Get it off, put it into a cold storage wallet. One of the most revolutionary things about Bitcoin is it solves the oldest problem in humanity, which is how do I store my wealth in a way that can't be stolen? And Bitcoin solves that. So take advantage of that feature. All right, so the realized price. Now, what we notice here is that we can see this realized price goes up when the price jumps up high, and then the price comes below the realized price right there. So what we can see is that there is some profit taking as the price rises, but then what we can see is that because of the stair-step function that you see right here, and then it steps up, so we can see when the price goes up, some people take profits, but when the price comes back down, people hold. So the people left over hold, they decide not to sell. Simple, right? And so what we can see is right here, we're following this graph, we can see that this realized price is about $24,000. Now the price of Bitcoin at the time of this recording is about 31,000-ish. So that means that the realized price could be about 24,000. It's just one way to look at it. I'm going to bring it all together for you. Let's take a look at another chart. So another chart is something called the MVRV, the market value and real value. So we have the market price divided by the realized price. Now what's interesting to see about this is this just shows us when the price gets stretched away from the fair market or the realized price, the market value, or when it gets closer together. So you can see when this orange line passes through the price here, we've gotten pretty far away here, we've gotten far away here, we got really close, and you can see right here that we're pretty far away. So we have a wide ratio right there. Now, what we can see is that times like this, it can actually go lower than the average. So if we drew a line of the average across right here, we can see that, and sometimes it does go lower, but not for very often. So in an extreme dump situation like here or in March of 2020, we can see it get below that level for a quick short time. However, it gets bought up very quickly. Now, this is something I wouldn't be waiting for. However, if you see it drop below that average level, it'd be a massive buying opportunity. But as we can see right now, we are sitting right on this low end, which means, again, Bitcoin is at this bottom end of the range. Could it go lower? Maybe, but it's pretty overstretched. All right, so that's one way to look at it. And then we have another chart here, and this is one that's easy to use. You can use it across any financial asset, any of your stocks, whatever, and it's the 200 weekly moving average. And so basically what this does is, here's the price of Bitcoin going up, and this red line that you can see down here is this 200 weekly moving average. Now, what's nice about this 200 weeks is about 4 years. Now, Bitcoin operates on a 4-year halving cycle. So what that means is every 4 years, the new supply of Bitcoin, the stock to flow, so the new supply or the inflation rate of Bitcoin gets cut in half every 4 years. So every 4 years, Bitcoin goes through a supply shock, supply and demand. If you reduce the supply, but the demand stays the same, what happens to the price? It goes up, right? So every 4 years, the new supply of Bitcoin gets cut in half on a 4-year cycle. So the 200 moving average, weekly moving average works in this 4-year cycle, so it's pretty good. And what we can see is it's always been able to set this floor for Bitcoin. And now Bitcoin is coming down right here, but we still have a ways to go. Now, again, back to some very extreme, black swan type events like March of 2020, when the entire world crashed, the entire world was locked down, the market started crashing. Now, side note, if you weren't paying attention, back then, March 2020, the United States has something called circuit breakers. If the stock markets drop too fast, they trip a breaker and they stop trading. I believe the market stopped trading, 7 times. They had to stop it because markets were dropping so fast. Bitcoin has no circuit breaker. And as a matter of fact, there were some problems with some bugs, some hackers, whatever, on some trading engines that caused these shorts to stay open, that pushed it down even further than it should have gone, which it bounced back very quickly from. But what we can see is it did go through that 200 weekly moving average just real quickly, and it quickly got back above. So we'd say that anytime it gets below this 200 weekly moving average is pretty good. And right now that's about 22,000. Again, at the time of this recording, we're about 31,000. So again, it sets a floor in that 22,000 range. Now, we have something called a fair valuation. So what is the fair valuation of Bitcoin price? Well, we can do two things. So we can overlay two charts, the 200-week moving average, overlaid with the realized price. And so the purple line that you see here is the price of Bitcoin up and down. We have the green line here, which is the 200-week moving average, which we've already looked at. And then we have the on-chain cost basis is the red line that we've looked at as well, these stair steps. And so what we can see is that sometimes it has broken through the cost basis and gotten right to the 200-week moving average. We can see it here. In about 18, we can see it here again in that March 2020 event, and we can see right here we're sitting just above that right now, which puts this somewhere in the 22 to 24,000 range. All right, now what does all that mean? Well, what that means is that this is kind of the floor. Now, anything can happen. I like to use an extreme example that aliens could come back and destroy the world tomorrow. Anything is possible. I don't live in a world of certainties. I like to look at probabilities. And what we can see through 11 years of history is that this has set the price floor. Now, again, in an extreme event like March 2020, it did go through that, but only so quickly. If you were able to snap at that right then, you did really good. But those aren't something that you wait for. So for the most part, throughout history, this has set the price floor. So for the most part, this is your downside. So if it goes to the question of, should you buy now or should you wait? Well, we want to look at the risk and reward setup. So historically, 24,000 is the floor. Again, we're at 31,000 roughly today. So that means it potentially could go down by about 25% historically. Now, could go to zero. A lot of you guys watching this could say it go to zero. Okay, so it has a 1 times downside. We'll look at the upside in a second. So we have about a 25% downside. However, this report came out. I covered it on my radio show. If you're not listening to the radio show, you should just search Mark Moss Radio or Mark Moss Podcast. You can catch it. But in this article that was just put out, JP Morgan, you heard of them? JP Morgan, the largest bank in the United States. Jamie Dimon famously said in 2017 that Bitcoin was a scam, a fraud. If anybody in JP Morgan even traded it, he would fire him. Of course, now they're all about Bitcoin. And they said that Bitcoin's fair value is 38,000. So they believe the fair value is over the current price today. So that means it has about, per what they consider the fair value, a 25% upside from today. And based off of the other valuations, we have about a 25% downside. So it's about a symmetric upside and downside. All right, now you hear me say all the time, I like and I look for asymmetric opportunities. I want something that has way more upside with just a little bit of downside, asymmetric. So right now, Bitcoin looks pretty symmetrical, about a 25% upside per this, about a 25% downside. However, that's only part of the story. That's what they say the fair value is today. But where is it going? What's the future valuation? So if we were looking at venture debt, I've been investing into private deal flow venture financing for a really long time, and you're typically getting into some new category that doesn't exist. So imagine if I was pitching you on Uber, and it's an app that you can call a car. There was no such thing as that at the time. Now there were taxis, and there were limos, and there were vans. And so you'd say, okay, well, the taxi industry is this big, the van rideshare industry is this big, the limo industry is this big. If we capture 5% or 10% of each of those, then Uber could be worth whatever, right? So that's the way that you do that. So we look at Bitcoin's future valuation based off the markets it's disrupting and what percentage of those markets could it acquire. Make sense? So if we looked at real estate, so Bitcoin is a store of value. Bitcoin is like digital gold. Bitcoin is like a Swiss bank account in your pocket. So let's break some of these down. So Bitcoin is like gold. Okay, great. Gold is about a $12 trillion market. Bitcoin is about half of 1 trillion. Now, JP Morgan, Citibank have put out guidance saying they believe Bitcoin will overtake gold. So that's 12 trillion right there. Could it get 10%? Now, they said it could overtake it, but even if it got 10% or 20%, that's 1.2 trillion. That's a double from here. Okay, now they say it's like a Swiss bank account in your pocket. So offshore bank accounts have been used by the rich to keep money outside the reach of their government for a long time. But we see Russian oligarchs getting their bank accounts seized left and right today. And so Bitcoin is certainly a better Swiss bank account in your pocket. It's certainly a better way to hold your wealth that can't be confiscated. And yet we have over $30 trillion sitting in those offshore bank accounts. I always like to give you the receipts. Here you can see an article by Reuters. The rich hold $32 trillion in offshore havens. So it's certainly better than that. Could it get 10% of that? That's $3 trillion. That's a 6x. If it just gets 10%, that's a 6x from here. 32 trillion. What else? Well, we have, let's see. Oh, real estate. A lot of people buy real estate because, well, they need to park their money somewhere. And what we can see is that the world's real estate reached 32 trillion. 32 trillion people that are just parking their money because they don't want to leave it in the bank where it's losing money. There's $326 trillion sitting there. And then we have all the global equities right here. Per McKinsey and Company, $118 trillion and counting. So we got real estate, $326 trillion. We got gold at $12 trillion. We got equities, $118 trillion. We have negative yielding bonds. So the governments around the world are selling their bonds, raising debt. About half of the government bonds are negative yielding. So that means when you loan money, instead of getting your money back plus interest, it means you're paying people to borrow. How does that make any sense? It only makes sense in a world where there's nowhere better to put your money. So I might as well give it to you, even though I'm guaranteed to lose. At least I know how much I'm guaranteed to lose. And so there's 18 trillion there. Could it get some of that? 1%, 2%, 10%? You do the math. If we add all this up, we get to 500 trillion. 500 trillion. Now, we can keep going. There's way more markets it's going to disrupt. I'm just stopping here. 500 trillion. Could it take 5% of that? Now, JP Morgan and Citibank said it will overtake gold. I'm just saying 5%. 5% of that gives it a valuation of 25 trillion. Now, there won't be any more than 21 million Bitcoins. So we take the 25 trillion divided by 21 million, gives us about 1.2 million per Bitcoin. Today, the price is about 31,000. So this seems like a fair way to do it. This is the way that I've measured deals for over a decade. All right, so what that means now is if we take that valuation, if we have about a 31K Bitcoin today, and it could potentially go up to, say, a 1.2 million, that's a 40 times return. Wow, that's pretty good. I like a 40 times return. What's my risk? All right, all real investors always manage risk first. So what's my risk? Well, 31K, based off of what all the data that I've shown you, my floor is about 22,000. So that's a negative 25%, or let's call it a 0.025. So I have a 0.0% downside, and I have a 40x upside. That's what I'm calling an asymmetric opportunity. Now, okay, for all you Bitcoin haters out there, it could go to zero, Mark. It could go to zero. Okay, so it can go to zero. So then, instead of a 0.025, we have a 1x downside and a 40x upside. Still pretty good. 1x downside, 40x upside. You can plug your numbers in however you want. I showed you how to come up with it. I think it's about a 0.025 downside. You may think it's a 1x upside. You may not think it's a 40x. You may think it's a 20x. You do the math on that, but let me know down below. Let me know what you think. Also, I want you to ask me questions. I love the comments. Please bring them. But ask me some questions. I'd love to get more engaged with you in the comments below. And I'm going to start taking those questions and making videos about them. So please leave me a question. And of course, as always, give me a thumbs up on this video if you like it. And subscribe. It really helps get these videos out to more people. And if you don't like the video, still subscribe, but you can hit the dislike button. That's fine. But at least leave me a comment and tell me why. And that's what I got for you today. All right, to your success. I'm out. Since you've stayed to the end, I know you like this video, which means you're probably gonna really like this video right here and this video right here.